How did VOO, the S&P 500 ETF, do over the last 10 years? And what can we realistically expect from the next 10? I am Giacomo, founder of Awalyt. This is our weekly video where we try to go a bit deeper than the headline numbers. Because the final number usually only tells you part of the story. And to really understand what's going on, you need to dig a little. That's exactly why we built Awalyt. It's a portfolio analysis platform and we are in pre-launch right now. So if you want to lock in the founder price before launch, the waitlist link is in the description. Let's get into it. To the first question, we can answer right away. $10,000 invested in VOO on April 2016 is worth around $40,000 today. That's a total return of about 300% or 14.8% per year. So your money grew nearly 4 times in 10 years. The number is impressive, and yes, it really is. To give you a sense of the journey, the volatility was around 18% per year, and the worst drop, what we call a max drawdown, hit minus 34% during the COVID crash in 2020. Only 2 years closed in the red across the whole decade, 2018 and 2022, and 4 years returned more than 25%. That's the past, and that's the numbers that you can easily find in Awalyt analysis. But here's the honest part. This number alone doesn't really help us decide what to do today. What we want to know is the second question, what to expect from the next 10 years? And to answer that, we need to look at where we're starting from, because 2026 is a very different situation from 2016. First thing, valuations. Back in 2016, the S&P 500 was trading at PE ratio of around 18. Today, the PE ratio is closer to 26 or 28, depending on how you calculate it. That means you are paying almost 50% more for every dollar of earnings compared to 10 years ago. So a big part of the return from the last decade didn't come from companies actually earning more money. It came from the market being willing to pay more for the same earnings. Second thing, concentration. The S&P 500 is made up of around 500 companies. That sounds very diversified, but today, the top 10 companies in the fund, Nvidia, Apple, Microsoft, Amazon, and so on, make up 36.5% of the entire fund. Nvidia alone is 7.58%, and 10 years ago, the top 10 were about half of that. And of those top 10 today, 9 are tech or tech-related companies. The only one exception is Berkshire. So what we call the broad US market is really a fund where 1/3 of your money is in 10 companies, almost all in the same sector. So what does all this mean for the next 10 years? The long-term average of the S&P 500, looking back almost a century, is around 10% per year. The last decade did almost 15%. That's 5 points above the historical average. I'm not saying the next decade will be bad. I'm saying it's fair to consider that returns might come back closer to the long-term average. If the next 10 years return 10% instead of 15%, the same $10,000 grows to about $26,000. Still good, but $14,000 less. Of course, nobody can predict the future. Tech might keep doing well. AI could really change the game and justify higher valuations. There could be macroeconomic shocks we don't see today. What we can do is look at where we're starting from and make our choices with eyes open. And here is the real point. If you want to keep investing in the US market for the next 10 years, that's perfectly fine. But it's worth keeping these things in mind. A lot depends on your profile. If you're someone who wants more diversification and you don't love having 1/3 of your money in 10 mostly tech companies, there are alternatives. For example, the S&P 500 equal weight. It's the same index, but every one of the 500 companies has the same weight, no matter its market cap. That's just one example. There are others also. The point isn't VOO is good or VOO is bad. The point is understanding what you're really buying and whether it matches the kind of investor you are. If this video was useful, please subscribe to the channel because I post one of these every week, and drop a comment below. How do you see the next 10 years for the US market? Are you staying full S&P 500 or are you thinking about alternatives? The full article with all the data and the free Excel are linked in the description. And if you want to lock in the Awalyt founder price before launch, the waitlist link is also there. See you in the next one.